ladies and gentlemen, thank you all very much for coming. His name's Charles McManus, CEO of ClearBank for over a decade. For 10 years, he led the business through regulation, politics, scale, and I'm guessing more boardroom drama than most of us could stomach. What was the original pitch for ClearBank and how did it change?
It was a serial entrepreneur. And he said, look, the fintech revolution is coming. There's all going to be all these fantastic apps. But what about the non-sexy bit at the end?
How do you keep culture intact once the company scales?
Of no egos, fail fast, learn. The most important asset, if you're not learning and developing, then, what's the point?
What was the moment where you thought, okay, Charles, I think this is going to break me?
Burning someone else's money and you've got all the responsibility of your team in relation to their jobs. There's nowhere to hide, right? And there's no one to, oh, it's him or it's her or whatever. It's you. It must be you.
Was it worth it?
God.
So, ladies and gentlemen, thank you all very much for coming. My name's Nick. We haven't met before. I am the host of Founders with Nick, the only podcast in the world at the moment. It's fantastic. We just hit 1 billion views, so very, very happy. Thank you, Charles. Thank you. It's a massive bot farm somewhere. So yeah, just want to say thank you very much. So let's get into it. So this is the very first Founders with Nick live event. This was an idea I had in my bedroom, I think, like all good and bad ideas. And back in November, so to be here now, over 60,000 views, over 1,000 people listen to it every other week. So yeah, it really is a dream come true. So I just want to say thank you very much. Let's get into it a little bit more. So tonight's guest, if you don't know him, then why the hell are you here? His name's Charles McManus. He was CEO of ClearBank for over a decade. For 10 years, he led the business through regulation, politics, partnerships, scale, and I'm guessing more boardroom drama than most of us could stomach. And Charles told me something very interesting into the lead up of this. He goes, nobody asked me hard-hitting personal questions anymore. So I said, okay, I'll try my best to do that. So that's exactly what we're going to do tonight. Not just the milestones, but the mindset, not just the scale, but the sacrifices. So let's get into it. Charles, welcome to Founders with Nick Live.
And thank you very much. Delighted to be here. And what a great venue. Love it. And everyone looks really relaxed. So, and whether we're doing Q&A or however we're doing, very happy to take any questions at all. If they're confidential, I can't answer. I'll play the fifth or plead whatever. But very happy to be as open as I can be. So looking forward to this.
Awesome. And questions at the end, by the way, so make sure you raise your hand. So question number one. I feel like Who Wants to Be a Millionaire does that, doesn't it? What was the original pitch for ClearBank and how did it change?
So the original pitch, if we go back to 2016, what did the landscape look like? And to be honest, it wasn't my idea. I'll tell you a bit of the story. It was a serial entrepreneur, the guy that founded WorldPay Cash Flows, a guy called Nick Ogden. And basically, I've been in banking all my life, regulated all around the world. I just helped Stephen Hester write off 10 billion in the RBS saga of the 40 billion bailout. I was headhunted to get the job to write off 10 billion in Republic of Ireland at Ulster Bank. And I did 2 years there where you'll recall the word resiliency in systems failures. That was the infamous RBS systems failure. Our corporate clients essentially went 10 days not knowing what their bank balance was and then sued the bank. And I had the subsidiary in in Dublin suing the holding company in Belfast, bringing up sterling first rather than euros, which was the right answer for RBS. But anyway, we had capital breaches, system failures. We had a bank that was losing $1 billion a year before the 10 billion write-off, 285 branches, 6,000 staff, and a bank that was in a bit of a mess. And in the end, if you know the story, RBS finally have given up on Ulster in relation to it. Anyway, came home from that, and I'd got various property interests in Ireland, and was going to take life easier. My wife was very excited. And it was a former investment banker at RBC that phoned me up and said, there's a guy with a crazy idea who are thinking of setting up a new clearing bank. Unfortunately, knows nothing about banking, but you should go and have lunch with him. And of course I said, no. My wife definitely said no. Anyway, I went and had lunch with Nick in the city, and he said, look, the fintech revolution is coming. There's all going to be all these fantastic apps, power to the consumer. But what about the non-sexy bit at the end? There used to be 16 clearing banks in the UK. In 2016, there were just 4, the big 4, and Co-op did a bit. You could count them as 4.5. All on legacy tech. They don't run their payments businesses as a P&L. It's a necessary evil to get to mortgages and all the credit products and deposits, etc., etc. What if you had APIs? What if I didn't know what it was at the time, ISO 20022 standard? What if you had cloud native technology and you connected that to the payment schemes, had a banking license, and with your API went out there and tried to sell clearing services, payment services to all of those regulated FIs, where in the UK there were, 5,500 from authorised payment institutions, credit unions, banks, building societies, etc. If you're not a direct member of a payment scheme, then you've got to go to a clearing bank. And I grew up on trading floors, derivatives, credit products, all the options, all that, if you like, bad stuff. And payments was ops department in RBC. It was obviously big ops around the world. Settlement. Anyway, I did 3 months due diligence on Nick's thesis, and realised that the tech was pretty poor. Realised that if you had the right cost base, elasticity with cloud, there was actually quite big margins wholesale sitting in chaps and banks and fast payments, etc., etc. And then the bit of market research that I did, there was loads of people crying out for actually something different, and therefore creating that end-to-end. We all talk about customer experience, right, until it comes to the payment. And of course, payment was not settlement. And if you want real-time settlement, not just actually pushing the button, then you need the tech stack that runs all the way to the back. Anyway, I thought there was something in it. So the deal I came up with my wife was, look, I'll do this for 2 years. I'll help Nick try and find some investors, see if we can get a banking license, and I'll be home. And of course, 10 years on, my wife's always said to me, Charles, there's always been another 2 years in your career. But I said, well, the opportunity is bigger now than when we started. But of course, we went through the highs and lows. We found the 2 billionaires. We couldn't find anyone in the UK. They wrote checks for 12.5 million each. And then we started and went on the journey to see if we can get a banking license, and we could connect the tech stack to the payment scheme. But there were things like, right, remember we were starting the same time as Starling, and then Monzo broke off and the rest of cloud. The FCA, cloud was a dirty word. Right, so they're all into data centers, and we flew from Redmond, Microsoft, the CTO, remember it very well, on a secret meeting in Canary Wharf with 26 different organizations, and we got him to do a presentation to all the regulators on cloud. It feels hard to believe now. And of course, we had to convince the FCA of cloud technology as well. So there were one or two challenges in trying to put it all together. Anyway, such a long answer. I'll try and do shorter answers for your next question.
No, not at all. So actually, just dovetailing from that, what nearly broke the company earlier on?
Well, could we actually do it? The strat line of the first new clearing bank in 250 years, and there hadn't been one. The rule books didn't actually allow for it. And what do I mean by that? So the 26 stakeholders, remember the payment schemes are all independent. Chaps wasn't in the Bank of England then. You didn't have Pay UK. They were all independent boards that the big four sort of sat on. And we had 26 different stakeholders, from the Sterling Monetary Framework to the Bank of England to this, that, and the other, chaps, backs, all of those. We got them all in a room, 26 of them. A number of them had never actually met each other for the first time in all of that. And the chicken and egg was, you can't become a member of a payment scheme unless you got a banking license. Well, we didn't have a banking license. We were applying for one. So the rule books did not work. And without the goodwill, essentially, of the people in the Bank of England and various others to go with us to run it all in parallel, that actually go with us, and the moment we get the license, then we get the payment scheme and fit it all together. If we hadn't have got that coordination and working with regulators as a team, we would never have achieved it. So because the rule book didn't allow for the scenario that we actually had.
Can somebody set up a ClearBank-esque type thing tomorrow and have it smooth?
Well, since then, we knew the competition would come. So now, of course, there was then the Bank of London, which is now Bank of London, a great name change. I hope they didn't pay a lot of money to get rid of but rebranding. But I never say a word against a competitor. But anyway, and since then, of course, we've had Griffin, that's doing really well. And there's the non-banks in relation to providers, in relation to the modulars of this world and various others. And Europe is a whole nother story. But of course, on the basis of there needs to be good competition. But we had longer than we thought. We had about 4 or 5 years before a competitor came in. The great thing was our first clients were, like a lot of people in this room, that were, although perhaps slightly more advanced, founder CEOs that were sick to the back teeth of the big four. And sorry if there are big four here that's been in payments or whatever. But anyway, a good example is Allpay. Allpay is a 6 billion card business. Tony Colleen was the founder. And he said, Charles, I am sick to the back teeth of NatWest. He said, they never tell me the truth when something goes wrong. I can never get hold of their CEO. When there's an incident, they don't run it live, and I can't manage my end clients because they never tell me what's really going on. And he said, I just have frustration and the price goes up all the time, and the tech's not great either. I don't care if your tech is less, but if your culture is right, that you are accessible, you are transparent with us of what is actually happening in the tech stack and payments, and you're my business partner, I'll go with you. And so we had some great clients that were foundation clients that were our guinea pigs. And of course, then we got them going. We stick handle all the payments through the systems. We worked with them, and they became essentially our reference sites. We didn't have a lot of money for marketing in those days. Like any good business, right, or a restaurant area service industry, your customers or your best marketeers in relation to. And of course, they then told others, and others came. And today we have over 250 live financial institutions on the platform, including Revolut and Alica and Zopa and in relation to some amazing client base. But at the start, it was pretty hard. But it was all built out of wanting a better answer.
Just on that, I think something which I've noticed is hiring from the start, which can be really mission critical. How did you find the right people for ClearBank? Did you immediately look at somebody and think, yeah, that's the person, nailed it? Was there a lot of firing? Was there a lot of churn? Founders and CEOs?
You'll be pleased to know we didn't get it right? There's so many lessons learned. People, one of the hardest things. And I went to a McKinsey presentation in relation to sort of startups and scale-ups. I remember sitting in the audience, and they used to talk, it sort of frightened my exco to death, that Alipay and all of those, you basically change your C-suite something like 6 to 18 months, deliberately so, from a startup to a scale-up, because people with a startup did not have the skills to scale up. So obviously job security didn't look too hot in relation to that. The other aspect, of course, when you're starting, ClearBank, who, what, right? Why should I work for that? And job insecurity, all of that. So anyway, those people that have got the mission, the passion, and the risk taking to actually come with you. There were 7 of us to start with. And we got to about employee 62. I remember I used to do 5 minutes with every new employee welcoming to the bank, and then we were hiring so many people I had to do one-to-many around the table. But the important things was they'd chosen to come to us, and we had a contract to give back to them in terms of a journey, etc. And as you can't do it yourself, that we all know it's all about team and scaling and leveraging all that talent to actually go on and actually build something. But it was right. So the people that were good in writing our 2,600 pages of banking application, our chief risk officer and various others, were not a chief risk officer 2 years on when we were taking on quite large banks and the rest. But we built in like anything in HR and looking after people and taking the right decisions and taking people with you, and they're still option holders and the rest. They still have a strong interest in relation to what happens because they want their options to turn into cash further down the line. We were never, even in the investment banking world with RBC, we weren't a Goldman Sachs of getting rid of the bottom 10% every year and all the rest. People lost, or all the cliche. Your most important asset, you need to look after them, invest in them, and people need to grow. I mean, take our first 6 graduates. You may all have the same. I had 5,000 applications. We whittled it down to 40. And we had a day of desert survival, various others with the XK, and we picked 6, and all the rest had exit stage left. And we then took the 6 graduates to a pub afterwards, and they're on their phone to their mum and dad going, I got the job, it's fantastic. Unfortunately, none of them are with us, our first batch. They had the most amazing journey in watching the bank grow from the inside, access to all the C-suite, all of that. What's happened? Like Revolut, except they've all become entrepreneurs themselves. But they never forget the journey they had with ClearBank in learning and all sorts, but they've all started their own businesses, etc. So I'm a bit like a proud father, if you like, but disappointed we couldn't actually keep them. But we actually, even our MRO, she wanted more experience, go outside, and actually has come back as our chief risk officer. It's the biggest compliment you could actually have in relation to that. So the alumni and everything else is so important in building a longer term sustainable business.
How did you turn super early momentum into a scalable process then with that? Because obviously you've got people leaving at different times and new eras starting. Yeah, I guess, how did you turn that early momentum and think, okay, that we need to now put infrastructure in place to scale this appropriately, otherwise it could be a headache?
So again, large part of the story, I'm sure every startup was going through it, and we got caught in the trap in relation to learning of the difference between being customer-led and product-led. And so in the search for revenue, instead of doing tiny clients, let's try and get nationwide as a client. And it will be brilliant. Problem is, the larger clients want finer pricing, and they want bespoke, right? It's all about them. And on the basis of then doing bespoke for a particular large client, what happens with the next one? Because they'll want something different, and you then cannot scale. Whereas if you're product-led, obviously you can do rinse and repeat, and you can actually sell it to numerous customers. And it took us a while to work all of that out. One might think it's very straightforward. A faster payment is a faster payment. So how can you bespoke that, right? You just connect it and do it. Well, of course, there's still bells and whistles, and the fees are on value-add services like foreign exchange or other things. And then we invented embedded banking, and we want this, we want that, and the larger clients. But we definitely lost about a year in relation to traction of chasing larger clients, as compared to actually getting the product right and being more product-led rather than chasing revenue. But as we still do some bespoking in relation to embedded banking, but when we look from where we started with Tide, for example, we've done Capital on Tap, Chip, the savings app, we then brought on Revolut. They've all got different, but the core of what we're doing in terms of a FSCS protected bank account embedded in their products is the same, and we can now handle a bit of customization around it. But actually, it's very difficult to do.
Really good insight there. I guess one which I always love to talk about is culture. How do you keep culture intact once the company scales? You mentioned there about employee 68 going around the round table. I mean, that's something I can imagine being a massive headache eventually when you're trying to scale a business, and potentially the values of ethics.
Well, I've always been I've been very C-suite roles at banks all through my life and around, and I've dealt with a lot of A-types on trading floors and bullies and bad behaviours and all of that. And I always try to be the rational one of, when you've calmed down, we can have a sensible conversation, etc., etc. But the big thing in all of that, which again is hard, but fintech are very good at it, of no egos, right? So, and try and leave the emotion out. And we're all emotional people, right? We all care. We get passionate about things. But I am massive in relation to team player, all about the team, not about me. And some entrepreneurs and founders or whatever find that very hard, right? it is all about them. It is all about their idea. It's my way or no way. And the bit about when you start, right, it's your idea, etc. But then if you put smart people around you, they've all got ideas as well. And so you've got to actually turn all those ideas and get everyone unified, cabinet collective responsibility of we're going in here. If it doesn't work, then pivot to that. So team leadership in relation to that, but then taking the company with you, right? That culture is so important. And I've had some bad cultures where I'd been in investment banking and behaviors and the rest. And I was determined if I was CEO and founder, I would try and do better, right? And so the whole concept of no fear, not firing people, right? Of fail fast, learn, the post-implementation reviews, right? Really, really get the value out of things going wrong, learn and go, and then take accountability. It's great to say, it's all on the posters in RBS and all the big bank. Can you do it in practice? And the other thing, I was passionate about was celebrating the successes. In fact, some of the investors have sort of said, what is it with you, right? Well, you need to. But in fintech, the highs and lows are much more magnified than doing 9 to 5 at RBS. And so when we achieved our first straight-through payment, our first one, there was a massive celebration because we'd been stick-handling the things for weeks, right, that moment. And now we do over 200 million a day or whatever it is. But the first one is so celebrating that. When things are going wrong, right, then you find out how good your team is. We know it's fine, everything's going tickety-boo. When you're in the hole and it's not quite so good, then you really find out the quality of the team. And if anyone's done any of the management, desert survival and the rest of who do you take with you, right? There's 10 people. Which 5 are you taking to get to the island? And you've got to go through all of this. And someone says, I'll pick Freddie or Joan or whatever. Well, she's not very good or he's not. No, but they've got an amazing sense of humor. So when it gets tough, that person is going to actually get our spirits up. It's all that analysis, right, in team building that you actually need in terms of survival. It's really, really important. And so I'm very much a people person, and it's all about the people. And if you don't want to be on the bus, you don't have to. Go and do something. But if you're on it, then there's a two-way contract. We have to deliver development to you. You have to work hard and get on board, and let's see if we can do it together. The point that you were making was it was interesting in that it was employee number 62 of like-minded individuals where we're all focused on execution and just go. It was post 62 that we had our first, someone had got cancer, some relative died, someone was having a baby, someone was getting married, or you suddenly started getting real life. But the 62 were almost, there was none of that, and it was almost 100% on as you got bigger. And then, of course, in going international, where I used to be responsible for Asia Pacific and the rest, how do you keep the culture in the mothership to actually then get it in Amsterdam and all right, really difficult, right? So then it's the core in relation to your core values, but the local global. I always remember in going to Hong Kong and doing the Sydney, Hong Kong, Singapore trips and the rest, and learning the culture in Hong Kong. You go in, meet all the management team, they try and get you drunk and whatever. They'd say yes to everything, and then you leave, and then they don't do anything. That was part of until you worked it out, right? That was part of the culture of nodding and saying yes, but they didn't do it. No. You've got to move and change and work it all, but respecting their culture, but then getting the execution.
Coming from Hong Kong myself, I can double confirm that. Was there a moment? Well, I'm sure there was a moment. What was the moment where you thought, okay, Charles, I think this is going to break me?
That's interesting. I suppose like everything in relation to other people's money, right, and your loss making. One of the comments that I made when I first started was, as CEO, I can't remember how far it was in, I said I felt I'd been trained my whole career to do this job because I'd never been tested the way I've been tested. So in a larger organisation, you can float through a quarter, you can sit on a committee, you can be in a large team, and the ship moves relatively slowly. Not that I've ever done it in my career, but you can hide. You can sort of just glide, and there's finally an appraisal, various other things, you'll get found out or whatever in relation to what you're doing. At the beginning, I was 7 of you and other people's money. You make a decision. It's fully transparent. There's nowhere to hide, right? And there's no one to, it's him or it's her or whatever. It's you. It must be you. And you're burning someone else's money, and you've got all the responsibility of your team in relation to their jobs. They've given up their financial security. You've got all that responsibility as a founder and CEO in relation to on you. You want to go fast. You want to get there. And interestingly, one of the things for us, because go back to the neobanks, the P word, you're all throwing it. That I'm a boring accountant at heart. Profit. Profit was a dirty word when we started. It was the Revoluts, the Starlings, the Monzo. It was all about top line growth, customer acquisition. Don't worry about the, profit. That'll all come later. Well, for other people's money and the rest investment, to me, it's not a purpose or vision. Yes, you've got to have all of that and get it right. But we were always going to get to profitability because I wanted to stop the investors. I'm going to write checks and go cap in hand to the billionaires to say, can you write another one? I wanted the independence of generating our own capital. And actually, that was out of vogue. Then, of course, we went through the fintech reset. Suddenly, EBITDA, profit, and as well as multiples of revenue became the valuation model. So that worked for us. But we never wrote a piece of business, not a single piece of business that wasn't profitable. I wouldn't buy volume for the sake of volume. And that forced us that the quality of the product had to be really good, because it got to be better than competition and all the analysis or whatever you use for your company. But we're not an Aldi or a Lidl, we're a Waitrose. And therefore, you're going to have to pay a bit more if you want the quality, because we deliver resiliency X, Y, Z, and not being frightened to try and do that.
Just on the leadership point, who did you have to become to lead ClearBank?
God, it's going to be a really cliche answer. We haven't put it. And you'll all know this because and it's not just saying, I didn't have to become anyway. You have to be an authentic leader, right? You have to, all this, I mean, it never happened in my day when I was in an investment bank, or bring yourself to work, your true self and all this stuff.
Yeah.
Sorry. I care so much, but my God, we never had any of that, right? You couldn't go. And when I was growing up my career, you just did what you were told, get on with it. And diversity and inclusion and ESG and all that, there wasn't any of that, right?
I brought myself to work first day and I got fired.
Right. So I've and to be honest, I'm in my 50s or whatever. So, can you teach new dogs new tricks, all that nonsense or whatever? I mean, I've always had an attitude of adapt or die. It's a bit strong. The rest people used to say that. It's a bit. Well, it is, right? And that's why you learn something every day and never get complacent that I know it all or all of that. Someone's going to be smarter and better and know more than the rest. So it's leveraging all of that. But I think it's really important in relation to a team of, if you're not learning and developing, then, what's the point? But I that sort of carrying that through of we're all in it together and authentic leadership, right, of trying to be a good manager and treat people how you'd like to be treated, all that stuff, right? Can you actually live it as part of your culture? And we tried to, because I've seen some really bad stuff through my career, right? So a lot of you are too young, but when Bearings blew up, Nick Leeson in Singapore hid all the trading tickets in the drawer and blew up a bank. I sat at the Bank of England on Sunday when the lifeboat was launched and they'd lost 280 million, and in the end, Ing paid £1 to actually buy it for a loss of 683. If he'd just put his hand up on day 2 saying, I've got a problem, Bearings would have survived. So when scaling a business, to me, the culture of, if there's a reconciliation break or if there's something, put your hand up. You won't get fired for it. right? I don't want to be woken up in the middle of the night that we got a 600 million black hole and we didn't know about it because we're going to go bust. So then the management team didn't get a chance to sort it out. But if someone put their hand up, we're all in it together, and I can say we gave it a go and we sort of failed. But why should you be so selfish to actually prevent that? So all the stuff about transparency, not being fired, curiosity, questions, no blame culture, all of that, it sounds great. But actually, to me as CEO on top we got bigger, actually is a self-control in itself. Because if someone will not let go of something's not right here, they could save the whole bank.
That's mental about that bearings thing about Tuesday. I had no idea if he just if he just shot up a flare. What's the cost maybe of leadership that nobody talks about?
Well, in C-suites, or actually, to be fair, again, throughout my whole career or whatever, I've worked, the cliche, work hard, play hard. We talk about work-life balance, all the textbooks and everything, all this sort of stuff. As a C-suite or CEO, you don't have a life. Your private equity and their investors, doesn't matter when it is, where you are, you're on call all the time. But I've worked very hard through my career of discipline, right? So my wife and children on holidays of putting the BlackBerry, I'm showing my age, but anyway, smartphones, all of that. And I used to put it in the hotel safe after breakfast, and then I'd look at it when we came back and showered. I'd look at for anything urgent, and anyone could contact me. And other than that, I'd run 2 weeks of actually doing that. And we also, for insurance purposes, you used to have 2 weeks where you couldn't give an instruction, right, in terms of segregation of duties and all that for insurance. But you are always on call. The sacrifice is significant. And I was always on planes all around the world and not at parents' evenings or there for my wife when X, Y, Z. And you're bringing material benefits, but the time is the most important thing. And prioritizing the people you love, your friends and all of that, whilst you're trying to actually do it. Everyone knows how tough that is. And I missed out on a lot. But my family got other things, and I'm now a grandfather and various things. I've got more time to actually give back. But also in bringing up my children and the rest of not being sport brats and grounded and working hard and all those things, those values, really, really important.
Was it worth it?
God, yes. Anyone who's scaled a fintech, whether it's gone wrong or you've succeeded, you can never, once the genie is out of the bottle, you can never take it back. I always talk about people where they go out of their comfort zone in terms of a job upgrade or a C-suite or whatever. They will be different afterwards. They can't just go back to the old job. They've developed, they've learned, they've got aspiration, they've got ambition. Build on that. Do not go backwards. So, that the relentless change and whatever. And that's how people learn. I mean, I know on the trading floor, I was given chances or whatever. We all know, right? You make a mistake, you learn, you don't do it again. If you make the same mistake 3 times, then it's not a training issue, right? There's a problem. You're in the wrong job or whatever.
You've got to fire him. Yeah.
Well, you got to move them or whatever. Yes, you might have to. But yes, there's that too. Yeah,
old FX days. Yeah. So I think final one on the leadership, Charles. I mean, who do you call when you're struggling?
Gosh, that is a good question. Well, there's the technical answers in relation to a CEO. The relationship you have with your chairman of your board should be one. And I've recently become a chairman now, a post CEO, and you have to ask your CEO, so how are you really? And I used to feel that was so insincere. I wouldn't even answer it, right? Because if someone actually cared, they would, and to be honest, you couldn't give an honest answer anyway, because were they interested? Or if you told them the truth about all the things that are going on, they'll be out of their depth to sort of be able to answer. You deal with it. But so, mentors, coaching, people you trust. Throughout my career, I've had a few of those. But another cliche coming up. My wife, coming up for 40 years now, just of marriage next year. So she was, when we got married, I was a chartered accountant, trainee accountant at KPMG, and she was a ward sister at St George's in Tooting, and she specialised in children's nursing. So as I go through my career, I used to come home and say the trading floor this, and I've been auditing that client and sounding off, etc. And she'd go, Charles, I've had 3 families and their babies died today, right? Did anyone die? And I used to go, no, right, well, just wind your neck in then and just think about it for a moment, right? Of course it matters, banking and the numbers and various other things, but there's real life out there. And I've been very fortunate. She's kept me very grounded through my whole career. And so to the extent of, having a partner, a team in relation to bringing all of the things, that's really important. You find your person who you can actually do that with. But I've never been one, fortunately, I'm not very good at therapy or counselling or wallowing in anything. I'm a classic man in relation to deal with those things by more action. And I've had to learn in teams to actually allow teams to sort of process failure, go through it in terms of the emotion, and then move on to the action, and not move to, well, we need to do this, right? Let people process emotions in their own way.
Just pivoting to the sort of the regulation of the government, because when we spoke, you said you've been working a little bit with the government.
Yeah, we announced it. Yeah, the Chancellor did a Mansion House speech, and for those that are interested, the Financial Services Growth Policy has actually been published, right? But yes, it's been a lot of work, basically. But anyway,
I guess something interesting I'd like to know is what's one policy change you'd push through in addition tomorrow, if you could.
Blimey. Well, sorry. Yes, I can. I'll do better on that. I've got a plug basically for all of you. If you haven't seen any of it, and no reason why you should, Innovate Finance, and I'm co-chair of the Unicorn Council and all that nonsense. But we've been pushing to try and get the government to change things to make it better, so you can all innovate and grow and all of that, and we can end up hiring more people and pay more tax, right? So we all know the game. But I do feel we've made some strides and determined to actually do it. So, for example, or FCA authorizations, you'll see the word there. Why does it take a year to get an EMI license or an API license? Why can't it be done in 3 months or 1 month? How do we get the flywheel going to allow all of you to scale harder? What are the barriers and things? Well, we've worked on the FCA now, investing more in authorization than trying to get the timelines down. We're trying to get scale-up units rather than start-up. So when we all started up, we got a load of help in the PRA FCA. Now that we've got some really good scale-up, we're getting no help. MREL, for those that are capital-minded and bank-minded, a bloody disaster. For, neobanks lend 60% of SME lending in the UK comes from neobanks, and we're killing them in capital on MREL in scaling. So anyway, there's a whole raft of our action list that we put in that we're trying to make it better to actually go. The one thing that is not there, which I'm afraid I'm passionate about as well on a global stage, is digital payments and programmable payments and the use of tokenized deposits and stablecoins. And look at the US, look at Europe, look at UAE, and the UK is just sort of stuck. The Treasury gets it, number 11 gets it. Unfortunately, the Bank of England does not get it. So the Treasury has got to tell the Bank of England, and we've been working for a long time, get off the pot, otherwise London is going to miss out. ClearBank issue 100% cashback stablecoin, interest-bearing, and even credit-rated, that could be wholesale cross-border and transform payments. People look at me as if, I'm on some different planet or a dinosaur or whatever it is. But, when the Chancellor went to the IMF meetings in the US, one of the things they all came back with saying, God, it's really joined up in the US between the Fed, right, the SEC and all that. They're really into digital. Yes, well, we're not. And Europe is even ahead of us with MICA and what they're doing, right? And if we're not careful, London, and not just London, right, we'll miss out on all this. And I was even talking to the chancellor of, on the trade deal, right? Well, we could list their US dollar stable coins. They could list our sterling, and we could use the stable coins to do cross-border settlement under the new trade deal. She said she even spoke to the Treasury Secretary in the US, and he thought it was a good idea. Get on with it then. Sorry, it's all too. But anyway, there's innovation and doing all of that. There's a lot more to come, and using the technology and AI, blockchain, smart contract technology compared to standing orders or upgrading backs as part of the new payment vision. For goodness sake, right? Where's the leapfrog to actually go on and do something? Anyway, sorry, that got me going.
The
on
passion
some of that
was
stuff.
clear there.
I call it the frighten my investors and board. I call it the Kodak moment. A number of you too young again. But actually, the Chancellor got it. So I know I'm talking too much. But anyway, she goes, "Oh yes, Charles, yes, Charles." I remember taking my film to Boots, and 7 days later, I got 24 pictures, and a number of them were all duffs. Whereas actually what happened was someone invented digital printing such that you never needed the film in the cartridge, and it didn't wait for 7 days, and you could print as many pictures as you like. That's what I view digital payments as in relation to analog faster payments or whatever. Someone will do it and conquer the world.
Well, Charles, we've got about 10 minutes left before we hit some questions from the audience, just to let you know. It's flown by. Loving it. Hope you guys are enjoying it too. This is now the big one. It's where the tables are turned. If any regular viewers of Founders with Nick would know, the guest gets to ask the host questions. So I'm very nervous. So, Charles, if you've got a couple of questions for me, please don't say you don't. Otherwise, it's very embarrassing.
I do.
And far away.
Right, well, sorry, I'm going to go for the softer stuff as well, right, in terms of... So what do you value most in your life, Nick?
Oh, tough. It's a good one. I think
your job? Is it your family?
No, I think it's definitely family. You can chop and change jobs. Tough to chop and change families. But yeah, I definitely think family. Calling family is number one value. I mean, what are we not doing it if we're not doing it for them and yourself? I think yeah, that's definitely the biggest one, 100%.
And throughout your whole career, here comes the cliche question: what are you most proud of?
Oh, Charles, so easy, so soft. I think starting the show. This was an idea like a few people in the room who are founders. It's such a momentous occasion when you eventually call your girlfriend, call your wife, call your husband, and go, by the way, I've quit my job. I'm going to go do it. And they all go, what? And I think definitely starting Founders with Nick was definitely like number one for me. Also realizing my worth, I think, was a very proud moment in my career. A lot of the time people get to dictate your level. Oh, you're only worth X. Oh, you're only worth Y. Oh, really? Oh, I don't really see you as that. And we believe it. And actually, when you start elevate your thinking, actually, I'm worth more than that. Actually, I disagree with you. Who are you? Like, why are we not challenging things more? Oh, that's the way you've always done it? Why? It's 50 years we've been doing like that. And I think like knowing your worth, knowing your value, I think, yeah, leveling yourself up is definitely, I think I'd never really had that. I always was dancing to somebody else's drum, so if I get promoted, I was like, oh, I'm worthy now. And I was like, well, hang on a second, it's a title. They paid me, I think they might be paying me less. Like what am I doing? So yeah.
All right, one last one then that I get asked of what advice would you have given your younger self?
Oh, nothing. Just keep going. It's all going to be okay in the end. I think. Just keep doing what you're doing. Make sure. I got fired from Le Gavroche. I was a waiter there. I got fired my first day, which was terrible. Michel Roux, if you're listening, wherever he is somewhere. But yeah, it's all going to work out in its way. Life finds a way. And I think don't overthink. That's a killer. I don't know if you're an overthinker, but I found anytime I overthink a lot, actually it's worse. Whereas I find the point and shoot and just going with your gut is a lot better. So,
that's very good. If anyone into sports, maybe you were a sportsman or whatever, I quite like sports as well. As everyone knows, in the top levels, right, you all know the skills are very much the same. It's all about the mind. And if you see any sports person overthinking it, you know that they're in trouble, right? So
There you go.
it's just got to be that natural talent.
Thank you very much. Well, Charles, we're going to take some questions, but I just want to say thank you so much. If we can give a round of applause to Charles. Thank you very much.
Thank you.
And then we'll do some questions for about 5 minutes. So if you'd like to ask Charles a question, just raise your hand and we'll give you a mic. Don't all raise your hand at once. Yes, young man in the front. I'll leave that with you.
Charles, I had to go back to, because I can go back in time. I'm not one of the younger members, and I do remember the Kodak moment. Go back to bearings and other things. Technology has advanced, regulation has advanced, competition has increased, yet still banks make so many of the same basic mistakes. Why is that? And I'm particularly thinking about compliance and regulation. Even Monzo just been fined £21 million. And repeatedly, despite all of the governance and controls and regulation, we still seem to make the same mistakes at increasingly big levels as well. And yet, why do you think that is still the case?
Great, really great question. Because every time there's another financial disaster, I say, well, why didn't the regs or whatever handle it before? I mean, we lived through it in mortgage-backed securities. The whole US, credit is evil. We know credit is evil, right? When people start structuring it and playing with it and making it too complicated, but it all runs away. That's a really good question because I've been on bank boards also on my life. And looking at the lessons learned from each of the failures of bank, I think what I would say, and one of my favourite books I like is, A Fish Rots from Its Head. All right, you get to leadership and sort of cultural boards. And it's a bit like the RBS board in relation to Fred Goodwin of how did it get that far, such that they bought an asset that wasn't worth what it was and then just crippled everything in terms of checks and balances, etc., and the sort of learning. It is a great shame, right, in relation to bank boards. You go and get a audit committee chair, a risk chair, a chairman of SID, and they're great at governance. And they're special, not necessarily great in relation. Have they actually run a business themselves? Have they been a risk taker? Have they actually done it? The quality of boards, where again a McKinsey review looks at the correlation between Asia Pac, US, and Europe of the amount of time that boards spend in relation to governance and compliance against strategy. In Europe, we are obsessed with governance and regulation, and yet we still have all of this nonsense. Tech spend, the productivity of tech spend by European banks is some of the worst in the world. Why is that? I pound for large retail banks. The reason that it happened, in my career, that the corporate loan books were given to the investment bank was that retail bankers are not commercial margin led; they're relationship led, and they're not hard-nosed financial guys like investment bankers in relation to ROE and all that. It has to be the quality of boards and leadership. You can't blame the regs. I always used to say, far from perfect, we should run a good business which then complies with the regs. We shouldn't be running the business to comply with the regulations. Of course, you have to. So I think it's really disappointing to sort of say. I think the other aspect that's true for the neobanks, and I knew Anne very well, and then Tom Bloomfield in relation to breaking away from Anne and setting up Monzo, and I was fortunate enough to know all the characters when that happened, and Monzo was actually born. If you know the Monzo story, and it's not the case necessarily at Starling, but again, tech-led. We all say, oh yeah, we're ClearBank, we're tech-led, we're a fintech with a banking license. The CEOs, unfortunately, I've been regulating bank. Tom was a tech guy. He had to be, his deputy CEO was a chief risk officer. That's the only way he could get his SMF1 because he had a minder. One thing that I've always been in relation to it is a risk manager. And if you've got tech guys running financial services, they do not understand the importance of the basics. fin crime, sanction screening, AML, all of this lot. And one of the things in building a successful banking business, you never let the business get ahead of the system and controls that you've actually got in the bank. And the regulators are asking us that all the time, right? And of course, if you want to be around, you want to go really fast, you're going to take some risks and you won't be ready and it won't all be tested and there'll be some mess. I'm guaranteed in relation to in scaling very fast, you can't keep the quality of those controls where you've got it. And so Starling got caught out, and I'm not surprised. Monza, HSBC have always done that, right? Have always been in problem. And then London's had the reputation of all the dirty money through the UK. I think we've found fin crime, AML policy and the rest really hard in the UK, and not strong enough talent in relation to that sector. But it is a shame, right? In relation to me, it always starts with competence and leadership and management and all those skills and culture in the bank.
You don't need me to say how much I agree with that, and you're so right. I worked with RBS through those years, and it was very much the board lost sight of and control of the CEO, and also their due diligence responsibilities. And I worked alongside Anne as well. So it's been an interesting story. Thank you.
Yeah. One of the things, lessons learned, was strategic focus, not trying to do everything, right? Again, obvious. I used to sit next to Anne on a panel like this, and she used to go on about retail banking, business banking, all of this, and they started doing payments when we came out. And I used to talk about payment settlement and clearing. That's all we used to talk. And other people used to come up to me, we're really clear about your strategy, your vision, and you're trying the best at what you're doing. But with that, she's into open banking, she's into this, that, and the other. And of course, they've been very successful, etc., in doing all the things. Be good at what you do and have that strategic focus. But the other aspect to that is coming back to all the smart people that you have around you with ideas, learning to say no really hard. Right? Stop focusing on what you're not doing and focus on what you are doing and get it done. And someone else will come up, well, we should be doing this. There's a big pot of gold over there and an amazing address. We should be doing that. Well, okay, you have to pivot and you have to know that, in terms of when you're onto a loser, but focus on what you're actually doing and be good at it. A lot of those banks lost focus.
Any more questions?
Thank you. So, Charles, banks fear fintechs, and that's very clear. So, JP Morgan have done two things significantly in the past few months. They've declared SaaS being vulnerable, and they've declared they're going to charge open bankers access to their data. So, they're doing the right thing to keep the fintechs away. There's a room full of fintech entrepreneurs here who've gone through your journey, building out their businesses and their careers without the security of, money. So what or who's going to change that fear factor between banks ingesting fintech and recognizing and respecting the value they bring to banking?
Another great question. One thing I think we all realize of speed to market, right? You look at go to product development, product roadmaps, go to market and speed to market. If you're doing, unless you're very small, you cannot do it yourself, right? So we all know as fintech, right, that partnership, what's going to be your core IP, what do you partner with, and what's the differentiator that you deliver to your client that's your IP, and having the best payroll or accounts payable is not going to differentiate, right? So working out the bits that are really yours that you can go on and actually do, and actually sort of outsourcing the rest. The fintechs become scale-ups, etc., etc. And I don't know, Revolut, is it worth 75 billion today? I mean, they're just talking about they've done the 2 billion at 75, ridiculous numbers. But they have scaled, and they are taking the big boys on in their own backyard through technology, and fintech can do that. The big four are scared, no question about it. You picked JPM, but they've got so much investment power. I mean, they bought Viva Wallet in Greece, 49%, and that's gone pear-shaped. They're now suing each other, and it didn't work. But they know they've got to buy fintechs to actually survive. Like, SVB with HSBC, for example. So, the disappointment is, are all the big banks only going to survive by swallowing all the best fintechs? Or can the fintechs actually become the incumbents in their own right? Well, I still believe if you get the right backing, that fintechs can be the next FTSE 100 and they'll drop out, right? You're looking at you look at the top 10 global banks around the world of the list today and what it was 10 years ago. And Indian, Chinese, American. There aren't many Europeans in the top 10 in relation to sort of play. But now with digital assets and crypto land, and will the likes of Circles and Krakens and Coinbases or whatever become banks and take on and disintermediate the banks? I think it's going to happen, right? The central banks don't want it to happen. But in payments, right, just like they try to stop Facebook with Diem having their own coin on Facebook, well, that's what Circle and everyone else are all doing. Why shouldn't you have your own settlement coin if you go through the central banks? The banks aren't going to have their loan deposit margins, but they're going to fight extremely hard to actually survive. But the only way they're going to do that, it's the same with Visa and MasterCard, right? Look at the diversification. They know the card game is up, so they're buying left, right, and centre in terms of diversification.
I think that's all we've got time for, because I believe the chef keeps waving at me through the galley. No problem at all. Well, Charles, I just want to say thank you so much for coming. Thank you so much, Paresh, as well, and Jigger for organising it, for Validat. We're going to stay around and have some drinks, some nibbles as well. I just want to say thank you very much again for the insight. It's been an absolute pleasure.
Thank you for inviting me.
Charles, thank you so much. Hope you enjoyed that. Thank you so much.